Capital budgeting is how businesses decide where to invest their money for the best long-term benefits. Think of it like planning a major personal expense, like buying a house or a car. You wouldn't just pick the first option. You'd compare costs, benefits, and future value. Now, imagine a company that makes smartphones. They have three options for using their budget. 1. Upgrade their manufacturing equipment to produce phones faster and cheaper. 2. Open a new retail store to attract more customers. 3. Develop a new phone model with better features. To make the best decision, they use tools like net present value (NPV). Will this investment make more money than it costs over time? Internal rate of return. What's the expected percentage return on this investment? Payback period. How long before the company recovers the money spent? If upgrading equipment will save millions in production costs while increasing sales, it might be the best choice. But if a new phone model has high demand and promises even bigger profits, that could be the smarter investment. Capital budgeting helps companies make strategic decisions so they can grow, stay competitive, and avoid wasting money on bad investments. Even if you're not in finance, understanding this process helps you see how businesses plan for the future.